All right. Gotta love this market. Thanks for joining me again. I'm here to talk about fix and flips right now. The fix and flip approach is the number one approach in today's market. The reason I say that is because I've been shopping with a lot of buyers. They're very conscious of 6% interest, 6.25% interest. If you're buying for investment purposes, seven, maybe even higher than 7%. They're also, everybody's conscious of Donald Trump and Jerome Powell going fist to cuff over lower this and you're over budget on that and calling each other out on stuff. And it's just the whole point of it is we have a certain level of economy that has never existed before without lowering interest rates. Jerome Powell, maybe rightfully so, is holding those interest rates up artificially. If you ask everyone else in my circle, and I'm pretty much the only one that would be okay with the next 10 years looking like 6% mortgages. The only reason I say that is because it's a really healthy amount. It's healthy for the economy. It's healthy to keep housing affordable. You see, everybody thinks that lower interest rates makes housing more affordable, which that's not the case. Right now, we've been in 6% interest, and people are shopping, let's call it $600,000. After you factor in the taxes and insurance and maybe even HOA, you're at or over $5,000 a month if you're using a zero down VA loan. That's incredible. That's crazy. 5,000 a month. Who ever would have thought? And what can you get for 600,000 here in San Diego? Maybe a really small three bedroom or a larger two bedroom that's detached. You can most areas find a three bedroom condominium, but heck, I just helped a buyer buy a $1 million two bedroom condominium, right? So it's just a matter of where it's at and where it's located. But let's get back to the topic. The real topic at hand is that everyone participating in the buyer realm of the industry of real estate right now, they're going to look at these houses and they're thinking to themselves, is this worth $5,000 a month? You know, I could take you to a $700,000 listing that the neighborhood used to sell for $900 to $1 million. I'm not saying that that neighborhood has lost 20 to 25%. What I'm saying is that this house is priced at $700,000 because it needs $100,000 worth of work. So not all buyers have the money for the down payment, the closing costs, and another $100,000 after closing. Especially your younger people. That happens to be the majority of my clients are in the military. They don't have a whole lot set aside. They're building up their TSP accounts. They're going into IRAs. They're buying stocks. The stocks are performing fantastic. The TSP is awesome. I looked at my TSP. Basically, I have three times as much money in the TSP as I put into it from the very beginning when I first joined the Navy 25 years ago. So here we are, back to the topic, fix and flip. If I take a buyer in this market to a fix and flip, they want it. Okay, I've seen enough. I want it. Now let's talk about not wasting money. What's interesting to me is that you can spend a whole lot of money on the outside of the house, as in front yard, backyard, so on and so forth. But all of these lists, all of these fix and flips, it doesn't matter to the buyers what the outside looks like. As long as the outside looks like there's no deferred maintenance, so you got a decent paint job, your wood's not dilapidating or cracking and peeling and falling apart, you're in good shape. Scrape that old bushes, all of the hedges, all of the grass, scrape it to dirt. I just put in an offer with one of my buyers on a place that is fantastic inside. New floors, new paint, new baseboards, new kitchen, new bathrooms. That's it. The backyard is just actual dirt. And I even said, hey man, you worried about that dirt back there? Nope, not in the least, not at all. The front yard is just regular grass. It's not even new grass. So the flipper didn't even do that. All he did was come in and go bing, 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 right? So instead of thinking, oh man, this is a $100,000 project, why not go out there and shop for the properties that might be that $700,000 place in a $900,000 neighborhood and factor in that, maybe you don't need the new kitchen. maybe you'll do the new kitchen and bathrooms and flooring and paint along the way. So instead of looking at it like, oh my gosh, this is a totally different house, you're talking about 30, 40, maybe $60,000 worth of work that is done on these properties. This guy bought the house that we put in an offer on for $600,000. We put the offer in for $625,000 and we lost. He listed it for 600. The biggest comp in the whole neighborhood was 617, and somebody outperformed us above 625,000. He bought it for 465. Come on, let's be that guy. Let's go in and buy the house at 465 in a $620,000 neighborhood. Let's do that. I want to make sure that you are out there consuming what is necessary. Now, here's the thing. That's the buyer side. On the seller side, put the 30, 40, 50, 60,000 into the house and get the $200,000 that this guy is getting. So let's just do the math. 465 was his purchase price. That seller walked away for $465,000. That same house, just a few months later, with new floor, new paint, kitchen, and bathrooms, is now looking at, that's like $40,000 worth of work because the house is 1,300 square feet, right? For 40 grand, we can go in and boom. And now it performs like a flip. Why in the world are people not saying, hey, help me, let's get this property to snuff, let's do what the flippers do and get you your equity, right? And everybody says, Danny, it's too good to be true, it's too good to be true. Your fix and list idea, your fix and list program, your fix and list package, call it what it is, it's just a fix and list. And I'll tell you right now, my motives are so that you hire me to sell your house instead of the next guy. And by the way, selling to that flipper might be fast, it might be easy, it might be this, but is it $100,000 fast, easy, and whatever else you gain from it? Is it? Because I can't think of a situation where anybody should ever sell their house as is, where it is, for $160,000 less than it's worth. On the buyer side, let's go shop and find you these houses that are put on the market in disrepair. Those sellers are thinking, that's a $200,000, that's $150,000, that's this, that's that. They're just making up numbers. Let's go put real numbers to these properties. And also, when we first walk through, let's decide, what are you willing to live with for a while? You know, my wife and I, we spent $1,050,000 on our house that we're in today. The floors, I hated them. The kitchen, I hated it. The wall paint was awful. I hated all of it. All of those features. But what I loved was the location, the layout, all of that stuff. You know, my wife and I lived in that property for a year and a half before we did any work on that property. And what did that afford us to do? It afforded us to live in the property and really decide which rooms deserved carpet, which rooms should be luxury vinyl plank. It let us decide, where do we want this lighting? It let us decide what colors work best in this neighborhood for our exterior. It let us decide, where are we going to put grass? Because there was literally one little patch of grass over to the side and that's it. And the rest was bark and all this other stuff. And, you know, over by the barbecue, there was bark and it was so old and dry that one night I barbecued back there and it was about 2 a.m. and I heard all this barking and I didn't understand why. And I went out to my backyard to figure out what's all this barking going on. And a dog from across the street saw that there was a fire in my bark. So what I do, I grab the hose and I put it out, right? My point isn't to go on and rant and rave about all this stuff. What it is to do is to let you know that, one, I think that we're in pretty good hands right now with Jerome Powell giving resistance to Trump, Trump pushing on Jerome Powell. That stuff makes us honest. Having competitors keeps people in line. It keeps any one person from running away with it, right? Maybe Jerome Powell would go up with the interest rates instead of going down, but he's got that pressure pushing down from Trump. Maybe Trump would grab those interest rates and slam them right back to 2%. What would that do? That would make the price of a house go up fast. We already know what that does. Look at 2020, 2021, and 2022. It was wild out there. 15, 20 offers for one house. I bet out of 15 offers, 10 of them didn't even like the house. They just wanted it. They just wanted something. They were tired of putting in offers. I bet that the winner of that property, it wasn't their first property. It wasn't their choice property. They probably got tired of getting beat and finally stretched to go up another $50,000, another $100,000. So my point is be careful what you wish for. Let's have a healthy relationship with real estate. Let's get into something that we can afford on today's interest rates. None of this 2-1 buy down. If you're working with somebody that's telling you to do a 2-1 buy down, fire them right now. Send them an email. Say, hey, I cancel this agreement that we have, the buyer broker agreement that we have. I cancel. Because why? Because they're setting you up to be in an unaffordable situation. So they'll argue my point with saying, oh, no, Danny, we're not actually hurting them. We're actually helping them, right? Because what is a 2-1 buy down? The 2-1 buy down makes it feel like a 4% loan for a year. And then it feels like a 5% loan for a year. And then it feels like what it really is, a 6% loan for the rest of the time. What they tell you is marry the house, date the rate. Well, if you would have followed their advice in 2023, guess what you're paying? Today's interest rates. You're paying today's interest rates. You were paying today's interest rates the whole way through. Why? Because in order to get the 2-1 buy down, you had to increase your price or keep the seller from decreasing their price, right? The appraiser had to come in and overvalue the property. In my opinion, it's just my opinion, right? They had to overvalue the property because you paid an extra $20, $30, $40, $50,000 for the house. Because what did that $20,000 to $50,000 do? It went over into the pool of money that the mortgage company has. You could have instead just saved that $20,000 to $50,000 on your purchase price. And you could have instead just felt that 6% mortgage until interest rates do decrease and you've got the house, which is marrying the house, dating the rate, which is actually 6%. So don't date the rate pretending that it's 4 and then 5, date the 6. Have the 6% interest. If you can't afford the 6% interest, even though the lender tells you you can, don't make the purchase. If you don't want a $5,000 payment, go buy a $500,000 house instead of a $600,000 house, right? So it's just about shopping smart. It's about knowing what you're doing. And the whole point of this video was, in order to do a successful flip, all you really need to do is have a clean yard and backyard and have new paint, floorboards, baseboards, flooring, lighting, kitchen, bathrooms. You're done. You can get it done on a budget for about 40 grand for a 1,200 square foot house. You'll have to stretch it up for the bigger houses, but you can always do much better if you just get out of your own way. Thank you for joining me today. I hope that you got some value out of this video.